You're looking at that one there, which was a daily. But when you look at that view on a monthly, if you just longed every single time it touched that, you would have been a pretty happy camper. So normal trends, any two. Doesn't matter how many are in between. And they can just roll through. Just got a thumbs up in the group from him.
He just said give him 5 minutes.
Okay, cool.
So speaking of trends, so a range trend is different than a normal trend. And what's the distinction?
A range trend represents the horizontal level, whereas a normal trend doesn't.
Okay.
So,
yeah,
like on a monthly scale, there is no trend representation of this horizontal level here. So which is a good thing because it can create that later. It's like another level of future support. Like if this candle had closed as a distribution candle, then there would be some trend. So just hypothetically say that was a distribution candle. And then what you actually have is you have a final breaking point of this horizontal level. Which is another reason why you can be bullish, right? Because you actually don't have a final breaking point of this horizontal level down here. It's neither hit the break level of the monthly range, nor has it created a range trend off the horizontal level. So if this was a blue candle, what you then have is another way for this thing to fail, because no matter where it went post that, like it could do this, whatever. It could be all the way up here at like 130, lose this, it's lost this. Right? So that's where you get those big shorts or breakouts, you know. So whereas without the creation of that, you can't break that level. So it's good sort of solid monthly support that with another chance to actually support again if it has to. So you can take this one as your opposite up here and that'd be a range trend there. So you don't have that monthly break level hit on the bottom. You don't have a range trend to break on the bottom. You do on the top. So if this was to get a monthly candle hard close over the top of it, well, that would be the end of that as a range, which is a pretty big range. It'll move it into something new up here. It's also one of the reasons why, it was always going to have some kind of rejection there. That first rejection, which was a doozy. So to qualify as a range trend, it's pretty much got to break a laddering point or break a break level. So it's always going to be created by the revisit of a hold level that's not been tested that has broken a break level. So yeah, that was just hold level. That was break level. That's all there was to it. Really, that's just some kind of hold level. Yeah, price could have still reversed from there and gone back up, created some kind of origin level and kept going. By this point, you could basically say that that hold level up there is capable in the future of creating some kind of range trend.
Hey, can you guys hear me?
Yo.
Yeah.
Good day, gentlemen.
How you doing?
Pretty good, yourself?
Yeah, living the dream. Expecting a boring day today.
All right, Apone's not here yet, but Hybrid is recording.
Cool. Okay. So, why don't we just we'll cover one type of trend first, and then the rules, and then we'll do the other one. So, let's use something completely different, like our best friend ETH. Okay. So, the first type of trend, which is just basically a standard trend, is any two candles of the same type. So that would be a trend. And the rules around these types of trends are, you need a hard close, so corner can't touch, like what that corner is touching there, that can't happen. And if you get that hard close, then it's going to use that trend as some kind of support to try and move somewhere. But there's got to be a target as well. So, people will often take a trade on a trend break, but the thing is, if there's no target, it's not going to go anywhere. Whereas in this instance here, it's built, there is structure here, there's a range, there's an untouched hold level up here. If this was to break, further down, it could target back to levels here, this sort of thing. And it also depends a wee bit on how it breaks, because if it breaks with a big wick at the top, then the trend arrays out to wherever that wick is, and then that trend becomes resistance for the breakout targets. So there's, you want to see trend breaks with no wick on the top of the candle when it gets hard closed, preferably. That's one type of trend. You can then move these through time. Like, so if you're looking for a trade, you're on a monthly, you can drop down to a daily, move your pivot point. So find a hard close daily. So there's a hard close daily. It's ahead of the pivot point. So you can't use anything back here because it's all back in time. And you don't move the origin point there. So you hover your cursor around and you find where your pivot point is. Then you look for your hard close daily candle, and there it is. So we can move that to there. And now we could look at, if we get a break of that daily trend, what are our targets? Because we didn't have really a decent trade to take on the monthly, but on the daily, if we break that trend, what are we going to go to? And a lot of the stuff that you sort of see in here has already been hit. So, once upon a time that was a hold level, and that got tested by this move back up into here. This is your hold level here at that moment, but the candle that actually hard closes and breaks out of this trend has already been there. So you've still got a minimum rejection point of that, which is the break level of that range. So when this candle closes, you can pretty much take a scalp in there and just go straight from 29.21 up to 3,048. That's going to be your minimum sort of move in your first rejection. Now, if it gets over the top of that, well, then that's great because there really isn't much to hold it back in here. So it becomes, once again, your break level, which is there. And you can see the rejection, it took off that break level. And if it gets over the top of that break level and hard closes, then it's going to become that one. And I mean, it went straight through that one, hard closed that one, retested it, which means it's going to be that, which was already tested by this candle before it hard closed that. So that was gone. So anything in here is gone because of that, which sort of takes you up to something bigger, higher time frame, probably that. So if you add all those candles together on the daily, that'll be like some kind of multi-day hold level, and that's what rejected it. So that's trend behavior. So normal standard trends. They break by hard close, they target untested levels, holds or breaks. If you don't have a hold or break above it, because it's really, really early in the fall, then it's not going to do anything.
Sorry, quick question. You got your anchor point from the higher time frame?
Yeah, so the most accurate way to do a trend is to find the highest time frame it exists on, which is there to there, monthly. And then you want to try and array it through time. So start total fresh. You got a monthly range. At that point to that point, you could mark out your untested hold up here if you wanted to, and just put that down as your monthly hold. And that was your monthly break level. And
so on this,
yeah.
So on this time frame, you got the anchor point from the peak, like the peak price of an accumulation candle.
Yep.
But so if you go down to the hourly, like that peak could be somewhere else. Like it could even be part of what's the blue candle on here.
100%. Yeah, you never change the anchor point. It always stays on the higher time frame. As you're arraying it, the only one you ever move is you only ever move the pivot point. So and I wouldn't typically go from monthly to weekly either because it's not an even divisible. So you'd normally go monthly down to daily. That'll give you better accuracy. Weekly to daily works fine, but you can start on a weekly, start on a monthly, and go down to a daily, but don't start on a monthly and go to a weekly because the candles don't evenly divide. So then once you're on that time frame, then that never moves. It's just floating there in thin air, but that's actually correct. So you're hovering around and you find the little dot, there's your pivot point there. And then you look forward to that pivot point to find the daily candle that closes, hard close over it, which is here. And then that becomes the daily break point. So when the candle breaks, it's that one. That's the one that kicks off your move.
So if I wanted to write a script that found a trend on the daily, I would have to use an anchor point from something higher?
Yeah, yeah, if you want it to be really accurate. I mean, you could probably try and find this on the daily. Start out as there to there. Yeah, it still works. There's nothing there, hard closes it. Yeah, still works. Very, very first two daily candles. And there's your break. So if you'd taken that break on the daily, your first TP would have been there, just into the hold level. And after that, you're working off that to that to that. And then you'd be following that trend and waiting for that to break, and there's the break, down it goes. So you could still do it off a daily.
Can we take a look at that example I posted to the trading channel? Would have been the hourly chart.
On Sol, right?
Yeah. So you had a trend coming off of April 20th at 1 a.m. UTC. And I instead had one at April 21st at midnight.
Okay, was it that?
It was a downtrend.
Let's see. April 20, oh, okay, so it'd be that. That one?
Yeah. And I had a downtrend from that peak just after it.
Yeah, because that could be a trend as well. Yeah, so this one's kind of interesting because on one time frame, this is just a normal trend, but it's also a range trend. So you've got an accumulation candle, a distribution range, and so this accumulation candle is the whole candle for this distribution range, even though this distribution range does not go lower than it, it's still actually the whole candle. So when you get this one, you actually got a whole candle re-entered by another accumulation candle. So that trend is two. There's two different types of trend just between those two lines. It's a standard trend, but it's also a range trend. So yeah, when the price sort of powered through that, it took out that whole range.
It's a range trend because it went yellow, blue, blue, yellow?
Yeah, basically, yeah. And it's not quite accurate to that time frame. There'd be another blue in here somewhere because you see that wick goes up and that wick comes down and then that yellow goes up. So it's something different, but it's still, that's a range trend. You can see how it uses it sort of for support along here and then off it goes. Whereas it's also in that moment a normal trend, and then the normal trend arrays downwards, it slopes down, comes down here, gets broken here. And then the attack of the hold level, so you long that, first TP, it's there. This stuff's a bit messy though because it's not like it's single candles, so it's not ranges on these time frames. So, like that's another distribution, a range of accumulation distribution. So that's another range trend there, and the retouch of the range trend causes that. So these things get all over the place, which is kind of why why it's quite hard. I don't know how you're going to manage these. You'll end up with a lot of lines. This is another one. Yeah. Distribution, range of accumulation, distribution, range trend, long entry. I mean, if you ever sort of wonder why, it's almost just like price just gets supported in midair. That's your That's your culprit there.
So on the 21st at midnight, which is the peak, you've got that reverse trend touching right
Yes.
now?
Yeah, so if you look at this and go, well, that's a hold level, and the first accumulation closed into the hold level, it wasn't down here, it was all the way up there. So that becomes a range trend, and that's going to be some kind of rejection point in the future. So that was that short there when it hit it. So 146 down to 143. And it became the support, which is actually currently supporting it now. So it became the support when it was hard closed there, rolling it up. And then each time it's touched that, it's bounced up. So, that's a reverse range trend. So that's, again, another type. And it can create them off areas like this at 144. So with this one, if you lose this level, it's probably not going to come back down here necessarily, because it can make another one from that at 147. It can make another one from 144. It'll have to create and then lose, create and then lose. Or it'll do a big dive and close below, and that'll create something. That'll create something on a downwards angle for it to follow down. If it did a big dive and created a downwards one.
So how do you know that the 21st at midnight didn't create a trend in a down direction?
It did. This one here.
Yeah.
Yeah, it creates it there. And then it breaks it here, straight into the hold level, which creates that as a standard trend. Or creates that as a new interior range trend. And it breaks here, but it's already inside the whole candle. So, it's kind of like when that trend breaks, it's already at its target. So it could just go down or up, but more likely it's just going to fall over because it's already in the whole candle. So that becomes that trend. So that's your next range trend that's created. That rejects off it. That's the first touch rejection of that range trend. And then down it goes. This one comes up. This one doesn't quite hit the body of that. But it probably did on some time frame. That becomes the next one. Yeah, that one's not, there's something really wrong about that when looking at it from the 1 hour time frame, because its rejection didn't actually touch it, and it didn't quite touch the bottom of that. So this would be one where you'd have to go and find it on a different time frame. It's going to be still not even that. Or maybe it didn't make it at all. Possible. But as you can see, you can end up with a hell of a lot of lines, as far as trading range trends go. So you'd sort of more use them for managing a trade rather than trying to take one. I mean, that would always be a point in the future at which you should look to take some kind of TP, just because it was a clear upwards facing range trend. And you see a lot of this stuff gets created pre-market, and then it'll be the point within some kind of market session where they push the price up to it and hit it, and so that'll get created somewhere before New York, and then that might be where New York rams the price to. Always get very suspicious of trends created through a big pump straight through a hold level like that. this case, it's suspiciously good. It's keeping the price up. But we kind of want this to break. Go down and buy more.
All right, well, you give me plenty to think about. Thank you, sir.
That's all right. Yeah. So those rules around range trends, I mean, they pretty much exist forever. They create the outlines of a range. They'll create channels. So like if you're looking to see about trading within a channel, there'll be another one probably somewhere. Just have to find it, but there'll be another one in here that would have got created at some point that would create the top side of that. But yeah, there's just so damn many of them that it's kind of hard to. I usually just use them for, is this price going to reverse? Is it going to go up? Is it going to go down? And it really can't go down until it closes under here. So they're good things for setting alerts on too. Shoppy. What's this thing up to, eh? This is a really messed up hold level here. Just because of that wick all the way down and back up again and closing an accumulation. So it's sort of, you could argue that anything below here is actually already a test of that level, in which case that's not going to do much. Second. Third. In 4 days' time, if that price stays up here, then you get another break. So the bullish case would be a 4 days weekly close outside of the line. So break 1, break 2, break 3. Maybe a retest of that, and then up to say hi to something up here. I guess the bearish case would be a retest of this. The thing to watch out for is how does it create that trend? Like, if it was to close as we see it right here, right now, the next weekly candle opens free and clear of the created trend, the same as what it did here, here, and that would be the same, in which case there's really no reason for it to reject. It's more likely just to go for it. Or if it does reject, the rejection could even just be in a little shallow one, just down to the back of the new trend that would be created. Maybe a bit more into there or something. If this pulls back though, And then the next weekly candle opens down here, and therefore on it, then that could create a problem. So push liquidity to the downside. That level there, that's, from a fib trade perspective, that's already been used, but it can still create a range trend by having any kind of blue close down inside that candle, or after touching that candle and closing blue. So again, another ability to create some kind of support level to work with. This really looks like it wants to fall over as well. Just go live on YouTube, bro. Does that even work? No. Not a technical person. This could be actually, this could be the start of something as well. I don't know how many people watch this stuff, but you've got your totals. So total market cap, total 2, which excludes BTC but still has ETH in it, and then total 3, which basically excludes BTC and ETH, and then others, which is just excludes all the top 10 tokens. So there's your Poo coins. You can pretty much just chart the market, if you will, this kind of stuff, and if you're just swing trading or spot trading, charting the market and then just using it to buy into a good asset. That sort of says the total market cap of crypto is had a weekly breakout, hit a target. And then when you look at the ETH, so excluding BTC but including ETH, same breakout, hasn't hit target yet. And likewise, if you take ETH out of the picture, that hasn't hit it yet either. So you sort of what that is basically implying is that the overall market cap itself has kind of done enough, rotation into the riskier assets hasn't fully happened yet. So something in here. 3.02 on the weekly. That'll be a rejection off the backside of that range. It would also qualify as the first retest of it because that's the break candle there that actually breaks out of that range. None of these are because they're all on it, not a hard close under it. So heading back up to 3.02 on the total, that would make a bit of sense. And likewise, getting up to 1.1 or 853.44. So you could almost use those as a bit of a gauge for where is Sol going to go, because it just seems to have hit its target and just kind of floating in the nothing. We had a 4-day break yesterday, which sort of kicked this off. And there is this level somewhere. There it is. There's that at 155.10, which is the reverse of this, but it's already had a retest after a break. So might not be anything really. And that was the TP from yesterday. We've got no high time frame breaks today whatsoever. We've got a daily, so maybe maybe worth a look. See. Three. No. I mean, it's on the correct side of the trend to do something tomorrow, but it's not really gonna have any promise of doing anything today.
Hi. How are you guys? Good. Zach, I've already seen you today. I've seen both of you guys today. Zach, I've seen you recently.
Oh, she's bribing. Wow.
Mommy.
Huh?
You were wrong, by the way.
About what?
About not having to need a physical form. It's like I was saying.
It's on the return.
That's what I told them. That's what I told them. Since these are physicals for the new year, you're gonna need to resubmit everything. So I had to fill out that paper by hand, all the paperwork. Luckily, it was just like a page, but some lady, I signed for you. I know it's forging this signature,
It's not
but
fortune. You had my permission.
oh, who's on the phone?
I just muted Big Tree. That's interesting though. There's probably only one daily breakaway from actually being able to reach up to 173. We shouldn't really be able to do it off this one, but maybe off the next.
So dumb questions. In terms of trend lines, they're everywhere, and you really only just mark the ones that you think are important, right?
Yeah, only the ones that are in the moment. I mean, for the higher time frame stuff, I just look at whatever high time frame closes we've got on the daily, which today is basically nothing. But tomorrow we will have something to look.
Did you see anything stand out as egregiously wrong in my screenshot I posted?
No, they're all right. They're just how relevant are they?
Right, yeah. Seems like the blue ones in the screenshot are actually somewhat accurate in a lot of places. Just testing out a new methodology.
We have this tomorrow, and let's see what it's up to now. Ooh, yeah. That could be interesting. So that's 2-day close tomorrow, which if they keep the price up above 148 for the next 26 hours, then that'll kick something off. Got here. Can't do anything much. That can. Really hard not to be really bullish right now. That closing like that basically seems start to run to 196. No, they don't need to retest. So there's high probability that they will, but yeah, they don't. It's not a prerequisite. The only reason I would sort of be thinking they will is because there's just considerably more liquidity to the downside, and it's like waiting on that TP at 152.8 yesterday. Yeah, the target was set in stone from the daily rollover. It was going to go there. There just wasn't any liquidity there. So they needed the bears to get bearish and feel like everything was toppy, and then after, it was within minutes of there being a decent amount of liquidity formed there, it was popped up and there it goes. So yeah, so targets like 196, etc. When you look at your 30-day liquidation levels, they've got 132 million that they can take by moving up $10 from where it is now. If they go down $10, they have 377 million to take. So that's the thing, like you can have an upside target, but is it worth them driving the price up there when they can go down, liquidate 3 times the amount of people, and everyone will start shorting if it goes down, so that creates the people that they can then go and take their newly acquired discounted assets and sell them into the short stop losses and liquidation triggers on the way up at a premium. And then, of course, everyone starts to long. You can kind of see how that cycle just rinses and repeats. And the holding pattern that we're in now might just be because we've got news, like FOMC or something. We got a US new home sales up. Interesting. Tomorrow. Got a Bitcoin futures expiration on Friday the 25th. Unemployment claims. On the 24th, so yeah, it could just be in a holding pattern. Waiting for unemployment claims maybe on the 24th. Who knows? If that comes in really shocking, be some excuse to dip and take that liquidity and then realise that the world is moving up and go back up. I don't know. Seems a bit of a strange place to stay. But we are also about to start to get some higher time frame trends, and yeah, how those candles open will have a really big impact on things. Yeah, Bitcoin's definitely showing strength. I've never actually seen something so oddly clear like this weekly structure down here. Like it's created almost like a laugh in your face level. Like anyone who's waiting for 69, well, that's a weekly origin level created at 76. So if it touches that, it doesn't go down to 69. I mean, it could do that kind of thing maybe and shoot back up again, but there's such perfect symmetry between the ranges. That was the origin level that supported the move there to the all-time high and lifted the price all the way back up from the depths of hell there. It's got perfect symmetry with that. And there's your hold level. 100 odd bucks in it. There's your next one. $200 difference. It's almost like someone's written the script and put all the side notes in and plastered it on the chart.
Right now, what's up?
That kind of means best guess is your top is in there somewhere. Wouldn't it be really funny if we had a really bullish May? Whilst everyone was thinking sell in May and go away. Then on the 26th of May, it goes there. Everyone wishes they went away.
May is never bullish.
No. So it'd be the best time ever, wouldn't it?
Like you always say, leave everybody behind.
Yeah. Yeah, so this trend here, it's had that test and rejection there, which is what led to all this. This one, it broke there, never got retested. This one broke here, never got retested. So it's sort of, I mean, that would be a bit nuts, but I suppose you could say that there's confluence in having those all the way up there. No worries. That'd be September.
Hey, lucky lad, do you know you're unmuted? No worries.
Unmute. I do that. There you go. Unmute it again.
It looks like you're just muting and unmuting people for yourself, by the way. It doesn't seem to be applying globally.
Oh, really? Yeah, okay. Not a tech person. What's the difference between mute and deafen? Is that they can't hear you?
I presume so. Well, it's time for me to go pick up the kiddo, so see you around, everybody.
Catch
Have
you
a good
later.
day.
Yeah, I don't know if there's anything anyone wants to actually go over or talk about. Just chuck it in the chat or say it. Don't think there's going to be much happening. Mm-hmm. Yeah. Yeah. Yeah, I don't know. I've never really found any logical way of tying economies or M2 or any of that kind of stuff into an actual price target. I mean, typically the tops of things will be the rejection of a reverse trend that's not been tested. Like, it really wouldn't surprise me if it spent a bit of time in this area, just enough for basically the bigger players to unload, enough of their bags and make them happy, and then down she goes. I have this saying that price action is lazy, and what that often means is like it likes areas where it can achieve two things at one time. So like being able to go to there, 150, maybe. But yeah, normally they'll create something somewhere which gets utilized later if it's not utilized in advance. So what was this? This was the top at that moment for a retrace, and so sort of what you're looking for is you find some kind of reverse range. So where the whole candle here and the one that enters the whole candle, the entry one that enters the whole candle is higher, and then does it get retested? And that's really close, but arguably no, it didn't touch it, didn't go through it, didn't bounce off it. So if that was never retested, what's it going to get used for in the future? And well, it went back up above it. That was the consolidation period, really, where they were unloading their bags. And then the first break of it, retest, down she goes. So a lot of that stuff's created, what was that, February, March of 24. So all of this is really just that time hype, bring people in, unload, and then dump, buying back. So do they use that again? Maybe. Or do they use whatever they've created in here? Well, no. But, I mean, if price got above these two, you would quite often see a bounce off the intersection, which could take you up to something else. On the support side, it's that, so yeah, I don't know. I mean, that's been broken, never retested. That did get retested. Some of these older ones down here, they never got retested. So I mean, these are all range. They're all range trends. They're all capable of creating a rejection. And could you see 150? maybe. So it's sort of within the scopes of where's that other chart? Weekly. In sort of October, November would mark the technical cycle end. So October, November. Forward. Very possible. So 4-year cycles and all that stuff. Like, the more people that think it's over, the more likely it is that it'll just play out. It's played out every other cycle, and we've had COVIDs, and we've had banking collapses, and we've had, all the other stuff. So I bet you in May of 21, when Bitcoin had dropped from 65,000 down to 30,000, I bet at that point everyone thought the cycle was over. And by November, it was at 69,000. So, yeah, don't know. It's not that different to what's happening now, really. Like, even if you sort of pull it forward a month, even if you sort of say that, let's say December, mid-December, or mid-December, 108, something like that, we've gone up to, gone down to 75. So pull this back a month, September. Now September's kind of where they cross. Yeah, maybe, but I think that would already be, that'd be the first part of the double top. It doesn't really seem like enough of a decline though, does it? But it's a bigger asset. I guess the pullbacks are going to get a bit smaller. But yeah, I guess there's a case for that. 2 untested range trends crossing over in September. Argument being that maybe our cycle profit taking started in December rather than starting in January. I guess it also depends on what everyone's saying when it gets to that point. I mean, if everyone's saying 300 grand and you're watching the price go sideways here, sell, because they'll just hype 300 grand until the bags are unloaded, and then it's like crypto, what is it? What's that one? Quantum computing breaks Bitcoin keys or whatever will come out. And yay. Yeah, you can never pick a top. You can pick probabilities, based on, well, just probabilities based on probabilities. The probability of a range trend getting retested is much higher than the probability of a normal trend getting retested, because a range trend represents the top and bottom of a range. So price moves in a range. So if you're in a range, you're going to test the top, you're going to test the bottom. You know, it's exactly like if you've got, yeah, that's what flags are. You know, price is testing the range trends at the top and bottom until eventually one side breaks. Up or down. And that's why a lot of traders talk about you don't buy the break, you buy the retest, because the break of a range trend actually has a higher probability of a retest. So two range trends, both broken, neither one has a retest. So how would you play it? Well, you can play it very safely, and you can say if the price touches either of those any time from now forward, you just take profits. Or you could say, well, what about time? Like, the end of the cycle should be, if it's like all others, somewhere between there and there. Should be. You could argue that this range trend down here, well, that one's already had its rejection, so if price gets above that, could it do this until it reaches the time window here and then start its spiral? It's all just guesswork, really. What's the EP charts? Whereabouts all around May. So, or May. And this is Sol's really odd range trends. So that retest would be, say, in May, around 220, 200. Yeah, it's not totally impossible either. It's, at the end of the day, Sol's a shitcoin. It can go up here. So, yeah. I mean, it could also be that doji in there is a bit, dojis are often filthy little things. Maybe that's the range trend. Not that. It sort of was that at one point. that was that first sort of consolidation area there of that trend. Very good. Yeah, I think that the tricky thing about Sol is just it's not just a crypto asset anymore. It's got the ETFs in behind it, and also with staking in the ETFs as well. So that's probably got slightly different applications. I don't know, you can probably think of that a couple ways. Like, if people buy into the ETF and they start to see, the sub top 10 assets, if you can call them assets, your bulk cap, whatever tokens, if they start to see all that stuff like absolutely mooning, they're not going to be able to sell their Sol ETF and swap it on a DEX into oh shit, that just gave me a thought. But yeah, in theory, they're not going to be able to swap it straight from an ETF into some other asset. Although there was something actually just the other day about Donald Trump investing in Crypto.com to try and get, I think it's so that they can have ETFs on the same platform. That'll be interesting if they do give people the ability to swap between an ETF and a meme coin or whatever. Who knows? That could sort of almost become a merging point for both ecosystems, but yeah, hasn't happened yet. I don't know. Market conditions seem right if you want to try and drive the price up of this, because so many people have either been wiped out or given up. So easiest way to get the price to go up is to have not a lot of people in the market. And then once it's up high, they'll look at it and they go, oh shit, we're up at 300 again, I better buy. Eek. Also think that's probably a pretty big one to close over. Those are probably your highest time frame range trends. Arguably that's just a deviation because it never hard closed above it. All these wicks down here, they're just deviations. 7 days. This is just a deviation.
I cannot hear you. Are you talking, Sin?
No, I'm just stuffing around on another screen looking at that.
Oh.
I'm just looking at this sort of point in here. Yeah, looking at that and thinking, oh yeah.
Saying something?
Yeah, I'm just thinking that by May, if we're sitting back up here, then that gives several months to do whatever it does.
Why they are not targeting when there's a lot of liquidity on the downside?
Very good question. Don't know. I mean, eventually they do have to stop. They only target liquidity because they're trying to buy your stop losses at a discount. Sort of like if let's say these were levels where people's stop losses were going to get hit and the order books were thin, so it wasn't costing too much to bring the price down. What they want to do is they want to have orders sitting here for buys, and when your stop losses get hit, you don't get stopped out here, you end up getting stopped out into this buy. If it cascades into this one, and if it cascades into this one. So in all cases, they've bought cheaper than where you were actually technically willing to sell. That's just kind of how market orders work. But eventually the bag is full. And they've still got to then have enough to be able to bring it back up. And then they want to repeat that. Like there's going to be a bunch of people who are in shorts, and if their liquidations are here,
Mhm.
they're going to want to have their orders here, hit this, sells into this, hit this, sells into this. And then they've basically bought everything at a discount down here and they've sold it up here at a premium. But there has to be a point, because people aren't going to stop longing. People aren't going to stop shorting. So there has to be a point where they just stop chasing it and then go the other way to unload everything that they've bought down here, up here, and vice versa. I mean, a pretty good indication that the price is not going down is just simply that they never hit the monthly break level. So
Electoral got hit, right? Yesterday, 152.
yeah, so the 152 is this trade. I'll run you through that. So every day I look at this. It's written a wee bit too far in advance, but you know, every day I look at that. And on that sheet are all of the multi-day breaks that are going to play out on any given date that you put in. And so yesterday we had a 4-day break and a bunch of others as well.
Are you generating that sheet using your script, or how does it work?
Yes, just a formula. It's just a formula based on dates. Probably find some way to share that, but there'd be a way easier way to make it. I just did it in an Excel spreadsheet because it was relatively easy to do the formulas and then just copy paste them over a large area. Does the job. I'm sure somebody could actually make something that figures it out better. So it tells me, for example, if I look at, go back a date, so 24th of the 4th, 225. So it's a bit homemade, but so it tells me that on that day, at the end of that day, these are going to be, so where it says 2, that means 2 day, 4 day, 7 day, 8 day, 14 day, 16, etc. That's all the dates. So that's kind of why, hey, look, today we're probably not going to see a hell of a lot because that's all we got, closing today from a high time frame perspective. But yesterday, we're probably going to see some action because there was a lot of high time frame candles being closed. And each one of these has to be pushed or pulled into a certain spot to create a reaction that dictates the next step in the process. So there was going to be a lot of things, and then it's kind of finding the one that looks really obvious and really clean, and also the time frames, because something like a 14-day break might take a really long time to play out. But a 2-day or a 4-day might play out pretty quickly, so decent for a day trade. So onto a 4-day chart, have a look at what the levels are. So you started out with the normal trend up there, to there, to there, to there. So we're already breaking up. Don't have a 4-day support trend yet. It moves to there. And so then that was yesterday's candle. Now, when that one closes, where are the targets? Well, that hold level's already been hit down here by that previous break. So like if we go back to the previous 4-day break.
That hard close, right? Why are you not adapting to the next candle?
To that one?
Yeah.
Because the wick on it's so small, it's not going to cause a rejection. So the price could freely move up from that. It's unlike that one, which, that close, the wick was so high on it that, it's probably not going to be moving up past that.
If the candle doesn't have a wick, we don't use it in the trend.
No, if it doesn't have a wick at all, then it's probably going to, well, if it doesn't have a wick, it's almost certainly going to open on the other side, unless it's a really flat trend, which could happen. But so I sort of looked at this and went, okay, 1, 2, 4. Okay, so this was a break. This isn't. But this was a test. Right, so this candle didn't technically break out of that trend, but what it did do was it invalidated that hold level because it went into it. So straight off the bat, it's like, okay, well, if we get a break now, we're going to go to some kind of hold level. Now, 2 candles is a range, 3 candles isn't. Right, so this candle had already hit the break level of whatever time frame range is in that group there, right? Which is something not a 4-day, but this had already hit it. So when that closed, this hold level's invalid, this break level's hit, this one hasn't been. Okay. This hold level's already invalid because it got hit by that on a previous break. So what did that leave us with? It left us with, we're in this moment. So let's look for most conservative targets we can find. This break level was hit here. This non-break of trend invalidated this break level here. Probably was a break of trend. In fact, I think it was a 3-day break of trend or something on a different time frame. Because that was a trade I think we did the other day or something. There was another one to 147 in there somewhere, where that was. And then this opens on the other side, takes out this break level. This closes, breaking this trend. And even if you adapt that trend to there, any new candle is going to open on the other side. So already hit, already hit, already hit, not touched. That's the minimum level that it could head to prior to some form of rejection. Then you look back here just to make sure nothing old is going to catch you out. And what you notice this 2 candle range here and that. And then you look at this and you go, well, this broke the range, this retested the range, rejection. So it's not too much to worry about. If this candle here didn't exist, then this would be capable of giving a very big rejection off that 155. So I mean, you could cheekily aim for 155, but the thing about break levels are always going to have some kind of rejection. They're always going to have some kind of chance for re-entry. So you might as well just TP at 152.188 and just re-enter if it gets recaptured, because it's going to reject off that, or it should reject off that. So your next candle comes along and hits a break level, goes a bit higher, doesn't reach what would have been sort of a cheekier level to aim for, so you just would have not got your TP in that instance. And you'd still be bobbing around in profit, but it's just easier to hunt the clearly obvious 4-day range break level from the 4-day trend break and then wait and see. And then all you can really adapt it to now is a daily, because we've got as a daily closed. So we could take this and go to there, and that was already a daily break. So that at the break level of that daily range in there, which happened to be the break level of the 4-day range. So like you've got confluence with that daily break and the 4-day break in that moment, both gave exactly the same level. And now you got that. And this can't break this trend because it's on the trend. So welcome to a nothing day.
So a break level, if it is tested once but there is no hard close, then it will be upgraded to a margin level, right?
No. It's only if it hits it and it reverses trend. So, which is the polar opposite of what it's meant to do. A break level says this range is going to be broken out of, and that's like, insert heavily bullish chart here. Break level, break level, not hit.
Mhm.
Hold level, hold level. Okay,
Okay.
just that says the intention is to go higher. If it had hit this line, it would have been completely mixed messages, and it would have been, well, the intention is to go higher and the intention is to go lower. Could be both. However, what this has created, if you look at it like that, is it's created an origin level now. So that's a high time frame origin level up here. And that can go one of two ways.
Why we are saying it's an origin level now? Because it's hit the
This candle.
break level multiple times, not able to break.
No, it's this candle. So there's just a local uptrend, and you could find another one. I mean, even that trend, that's on the corner, so it's actually still this. Like this blue candle here is what upgrades that. So now that thing's got a couple of options. It can either hit that and break a trend, or it can get over the top of that and use it like a ginormous trampoline to have a really big move up. So it's got one or the other. So, but as it stands, this is a very bullish chart because you haven't broken your monthly range break level down here. But you did break that one, or at least go through it. So didn't hard close it, or we would have never had a pullback. And this had managed to make a candle up here, we'd be talking numbers much higher.
And when does the whole level gets invalidated?
As soon as it's been closed in yellow, effectively. The hold levels, depending on what happens after them. For example, this is a hold level back in 2021 when it's created. But it's a hold level that there's two kind of types of hold levels. There's hold levels that create continuation or a break of structure, which is what this one is, and it's what this one is down here as well. Both of these led to lower lows, okay, without being used. And that's kind of the key thing. So nothing went back to this, but it led to a lower low. Nothing went back to this, but it led to a lower low. So these types of hold levels create ranges in the future. So they can reject more than once, because the first rejection is just simply because it's a hold level, and that's this rejection.
Mm-hmm.
But it also creates a range trend at the same time, which is that range trend right there. And that is going to represent this level and continue to reject price until it gets hard closed. But one of the key things is, therefore, that you now know that any hard close of this line is a direct invalidation of this range.
Got you.
Yeah.
So once we establish a range trend, we can remove the whole level. Because
you can kind of forget about the level. Like the level is just going to get broken because that trend is now a representation of that level. So, you've got to consider this in here as well, because that is another hold level there. So, like if they really want to bust this thing out to the top, all they really have to do is come up here, hit that, which is first touch of this. Now this did not break this. So this is not going to create a range trend, but it is going to create, well, it is a hold level. So it can come up here, it can hit this. It can have a rejection. But if it somehow settles and closes over that range trend, then 2021 don't matter anymore, and it can go up. And then it's really just a case of what does this do? Like this, which is now an origin level, does that push back down and then up, or yeah? Conservatively speaking, you'd TP into the hold level, see if it settles above the range trend, and then maybe long again to the origin level, see if it settles above and retest it. If it does, then you'd be looking for whatever kind of trend you can find, which is, I don't think much on the monthly, it's probably just something on the weekly. So it's nothing. Yeah, you have to find something on the weekly. So it's also entirely possible it just rejects off the bottom of this range trend once again, and then goes down and maybe breaks that range. Got pretty damn close that time. It was like a 1 minute level separating those 2 points. I hate this token. Do not know what powers this thing, but it doesn't seem to follow any rules.
So if there are more than 2 candles of the same color, then do we still take the any 2 candles with the first 2 candles with the opposite candle as a whole level, or will we not? Will we ignore it if there are more than 2?
No, if there's more than 2, it's the top one's going to be the refined point of the whole
Like
level.
in the one which you are showing on the left part, like the 3 accumulation candles.
Yeah.
There's a level.
Like, just see this here.
Mhm.
Okay. That's the hold level of this distribution range.
Yeah.
And you can just scalp that short. So price enters hold level, TPs, minimum retracement, 50 cent move, well, yeah, whatever, 50 cent move. That's just a really clean range, with the hold level. And did it break structure to the downside? No, it didn't break this stuff. So you wouldn't run a range trend off that at this, not on a 1 hour. But there will be something inside here ranging where you did get a break to the downside. So, and this is kind of why it can be a little bit confusing, is whatever's in here is just a plain old 1 hour hold level, which you could have taken a short scalp on. But there is also going to be other timeframes inside all this. So just like you can take this hold, which is just a single candle, and you can find the range of that. So like if we drop it to 15 minutes, well, here we've got 2. Okay, so there you go. That's another hold level on a 15-minute scale inside a 1 hour, and that trade is just played out there to there.
So when you drop, how do you expand it from the body to body of the whole candle?
Yeah, so this, so if you're doing a short, it's from body to wick. And typically it's because it has to be an engulfed candle, but the thing is, like, this is an engulfed candle at that time frame. It's just up inside that. So, because the range break, if you look at this sort of range, break, hold, let's get rid of that, break, hold. Rejection is going to be anywhere inside there on a 1 hour time frame, and inside here you're going to have lower time frame ranges. So if we drop it down and go, okay, well, what do we have forward of this point? Well, you've got that, and that's a backside rejection. Okay, so that's a very accurate method for a fast move. So that's the backside. This is the front side of the range, backside, front side. And so this part of the candle here will usually consolidate more before it rolls over, which is kind of what's up here. How they react quite differently. Wick up, fast rejection, wick up, fast rejection. And then this one, wick up, bit of a rejection, goes up, consolidates some more, comes down. So it's how order blocks behave differently. So then say you look at these two candles here. Well, that's the hold level of this distribution range. But this candle is already inside that. So that's where things can get a little bit messed up, because if it's already inside of it, is it going to reject? Well, probably. But where's it going to reject from? Or is it just a market in and short, and it hasn't hit anything up here. But somewhere in the future, and this is what this tells you, somewhere in the future, this trend here will probably create some kind of stoppage or rejection. It's also over. Yeah, and then this down here becomes the hold level for whatever's going on in here. So you've got the ability to take, well, actually that's a better hold level down there, but because you've got two candles coming up from it. So you had that hold level, which was going to be long, that you could take in there. This is going to be a hold level. It's a bit shittier because, number one, it's only one candle here, not two. So you probably have to go down lower, find what that's on. Yeah. So take that to there. You definitely wouldn't enter for that point. Where else could it go? It still went down really, really deep before I went back up. So that's actually capable of creating a range trend as well. That. Oh, actually, no, it's not. It's that. Yeah, so that's created that. So that means you could enter a long once that trend. So any of these dips down into here, you could just long the dip. Based on the fact you know it's going to go back up off the hold level, you long the dip, you TP at the trend. If it gets back up over the trend and hard closes it, you long the trend, go up. And that's what's on a 5 minute level, that's effectively the thing supporting the price now. And so that one can create that range trend because it broke the laddering of this. Went up to the higher high, came back down, went up, back down, went up again. So yeah, it can create something. I mean, if you had the inclination, you could just sit here and scalp 5-minute, 15-minute charts all day long on days like this. Just the moves are just going to be really, really small.
On the trend line.
Yeah, and you can pretty much scalp that trend line until it loses it.
So every time of the trend line you go along, and then if it hard closes down below, then we'll do a stop loss.
Yeah, especially if, like, as you can see here, it's gone, it broke this hold level here, okay? And this hold level led to a downwards laddering. So that hold level can create a range trend. That candle didn't touch it, this one did. So, like, realistically, the trade was in this range. Like, this is what it's in. So, you know, your rejection of that trend was the candle after this one, which is this, which is coming back to this trend, to go back to this trend. So it's gone up above it, and that one kind of just broke, so like that's really close, but that creates, I went into it, it's that one. So that creates that. This candle is the rejection back to here. You don't know that it's going to break that. Like, that's not a known. But it was going to come back to here. Then it did break it, which means it's come back to here. Now it's going to come back up to here again and try, give it a shot to get back up and over there. And yeah, so you can trade between these.
So generally, if I'm starting, like I'm getting lost, like I'm starting with higher time frames, like on 3 weekly, then daily, and then 4 hours, and coming down. But I have a bunch of lines, like, and then I'm getting lost. So if I'm doing scalping, like, where do I start? If I'm learning new, like, is there any simple strategy? Like, okay, start with 1 hour and then down to 15, and then try, and then once I get more knowledge for other things.
I suppose simply you'd start with the trend, really. Like, you've got to have your horizontal levels marked. But a move to a horizontal, or probably the easiest way to think about it is horizontals target diagonals and diagonals target horizontals. So to move to any horizontal level normally requires the usage or breakage or bouncing off a diagonal level. So if you were, and diagonal levels can only be broken with time. So it kind of starts with time. So hence, if we know we've got a 4-day candle closing, we can start by looking to see where is our current 4-day trends. And, you know, so I'll just hit daily close. What did we just get? Okay, so we just got,
Very close.
oh, that's a weekly. I'm on a weekly chart. Let's have a look. Daily. Oh, that's right. Our daily was a nothing burger, so let's forget that. Let's just go back in time. We're just going to be waiting for ages for something to happen. So I would usually try to find a higher time frame that's divisible. So if you're trying to put on a, say, a 4-day trend, you can't really start on a weekly because you can't evenly divide 1 week into 4 days. But if you're trying to figure out a daily trend, you can start on a weekly and then go down to a daily. So let's just go with some kind of weekly horizontal levels. So not much going on the weekly. You've got $74 down here, but that's still a long way away. Got 96 in there, or 95.995. So that was the weekly hold at the time that was holding that price up. So then you sort of look at it and go, well, we've hit that. We've hit the weekly hold in there. What's the next target? The next target's going to be the weekly break there at 147R. So that was the 147 trade. Okay. Then you've got to find your weekly trend. So where's our weekly trend? Well, it was there. Yeah. So this was a really clean trade at the time. This was your weekly trend. This candle couldn't break it. You'd created a newer weekly range down here, which had a hold and it had a break level. Hold level, break level. You've got a weekly horizontal over here.
Mm-hmm.
And to initiate a move, we need to break a weekly trend. Well, the first point of entry was the weekly horizontal. Were you already on the other side of your weekly trend when that happened? Yes. So what was going to stop it? Not the trend, because you're already on the other side of the trend. The first thing that was going to stop it was going to be the weekly hold level up here. That was 126. So 95.995 hit the horizontal already on the right side of the diagonal to actually move up. First resistance up in here. Now, has this been used to create a range trend yet? Not when the price was down here, it wasn't. Like if we go back to that point. But has a candle already gone up into this and rejected? Yes, it has, that wick, ever since that engulfment. So this wasn't necessarily going to be able to reject price, but it was going to be able to create a range trend which could reject price. So based on that, you were probably going to go beyond 126, but you don't know where. You can't figure that out, not until the next candle closes. So you enter this, you bounce. Right, you go up into there. It's already been tested by that wick. So next thing is, will it close yellow? Does it close yellow? If it closes yellow, you get a range trend. Okay. That's now your range trend. What does your range trend do when it first gets touched at 133? It rejects, because that's what range trends do. What's the thing going to support it? Well, you've got a hold level down in here, so it can find support anywhere below that sort of 124 mark. There you go, find support, through the trend, closes on the right side of the trend to move up, hits the break level. That's effectively how a trade works. That's why this area here is so messy.
Why you did not adapt the trend when the yellow candle had formed? Yeah, that trend.
So this one. So you could take it. You could take it to there, but you're already opening on the other side of it. So still nothing's going to stop it. Like the trend is only going to be a resistance if the price opens underneath it. And that's.
Okay.
You could then adapt it to there, but guess what? You're still on the other side of it. So it's not going to be, it's still not resistance. You know, even to this point, it's still not resistance.
Mm.
And that's where we are now. So this could retrace on break because you've got that range trend. This close in 4 days could retrace back to that trend. Very possible. And there'd be confidence in doing so with all that liquidity that's sitting there and all those people that are feeling pretty comfortable in their longs. So does it dip back down? Yeah, maybe. And then does it bounce off that and use it like support? Very probably. But a lot of it is determined by what happens in the next 4 days. If it just sits here and bores everybody to death for the next 4 days, then the candle could open on the other side of this trend. Then it could just use this and use the backside of that range to create the move up. This has only had a yellow close in it, so it hasn't had a blue close in it. So this bottom candle down here can create a range trend for support for the future. So there's a lot of probabilities and possibilities that could come about based on where this is right now. And there's also 4 days to go, so this could be a blue candle down in here in the next 4 days, creating some new range trend because you've already got these two yellows. So it's very clean weekly chart. It could be down here, creating another range trend, and it could bounce off that and move up, or you just don't. You can't see the future that far in advance. But yeah, simply put, you would look to see what diagonals can be broken based on time, and then you would look to see what horizontals there are in play around that diagonal, and then that effectively becomes your trade. And if you wanted to do it on a lower time frame, then all you got to do is find, let's find something. That was the establishment of our weekly trend there, so let's go back to that point. Wait, replay. Okay, so that was our very, very first trend. And it was created within the backside of whatever the range is in here. So that one candle on the weekly is not going to be one candle on some other time frame. It's going to be a couple of candles. Just have to find it. Somewhere. Freeze. Pick a number, see if you can find it. Oh, there's twos. Yeah. Still not much. You wouldn't really be catching these trades because that went up, broke that, tested that, and came back down straight away. If that went up again. There we go. So this is basically a trade trend to trend. So you break the interior trend, which is this one, and then your next resistance target is this exterior out here. And if you'd adapted that interior, candle opened just on the other side of it and went up and hit the exterior trend and then rejected off the exterior trend. So now this this whole level in here, which is lower time frame than that trend, so probably not going to survive, but this whole level in here is going to try and keep the price on the horizontal to get through the diagonal for it to have any chance to actually move up.
But that is a single candle, right? Why does
Yeah.
it become a whole level?
It's still a hold level, it's just a hold level on a lower time frame. So this is on a 2-day chart. So then somewhere down in here, there'll be multiple candles. So you'd have to start delving down into it to see if you can figure it out. Like, it was so light from just the bottom of that. Yeah, it's pretty doomed. That's why you got to be a bit careful trying to take fractal trades. Like, any time when the price goes up like that, it engulfs the body of something, there is a range in there. Has that range already played out in this move? Maybe. And you don't know that looking at it from a higher time frame perspective. If you took this whole area of the chart and dropped it down to like the 1 hour, there will be multiple trades inside the 1 hour because of how different that looks. Yeah, you've got structural moves ever since back here, which is where we started. You've got lots of moves. Take just that one as an example. So that's a hold level on this time frame. So 1 down, 2 up, 1 down, revisited, spike up. That was never retested in this move, so that also creates a range trend of that. There. Range trend was broken to the downside, retested on the back, down.
So when it is retesting, we should not be taking any trade, right? Because we don't know whether it's going to break or not.
Well, you already knew it was broken in that instance, like it was. Like if you'd taken it on the close of this candle here, or the touch of that trend, if you'd taken it, then the moment this candle here closed, you would exit at the retest there. Because that's basically, it's going down.
Got you. But it retests again, then we don't know what to do yet, right? For the second retest.
If it closes above it, then it's going to go for the hold level, which is there. And if the hold level doesn't break the trend down, then it's going to go for the break level. And if the break level breaks, then it's going to move to the next level. But you've also got that. So that's going to be... What does? Oh, yeah. Lazy price, eh? So look at that. Retest of the cross. Dump. So that's the kind of stuff you got to watch for. So like if every move between horizontal and diagonal starts with basically the break or the test of a diagonal, what do you think the effect is of testing two of them at the same time?
Can you say that again?
So if you think that if every move starts with the break or test of a diagonal and then moves to some kind of horizontal, what do you think the effect's going to be if you test multiple diagonals in the same moment of time?
I don't know.
The answer's a bigger move or amplification. That's like you've got this range trend that's been created up here from the re-entry of the whole candle after the break of the ladder. So that creates that one that's coming down this way. You had this one that was created from the opposite direction and broken. And then you've got this little point here where the price goes through both of them and then has an amplified effect to the downside. So that's like an example of...
Because it's more strong, like it's trying to reject two trends.
Yep. Yeah. Correct. Yeah. Yeah, and there's also the implication of there being more candles in here than two. So yeah, there's a bigger range. It's a bigger time frame range. And so it's going to hunt for something. And well, this is a pretty big support candle here. That was never retested, and that created a ladder. So there's more than two candles in between these. So that makes for a pretty good target. Creation. And long back off. Somewhere in here. Back up. Runs into our old buddy again. And what do you think is going to happen when you lose this trend?
So you have a script for identifying two accumulations followed by distribution, or two distributions followed by accumulation, right?
Yeah.
Do you use it for charting, or do you take it as a signal for something?
I just have it running on Bitcoin. I don't really use it for anything, to be honest. It's just I made it thinking, oh yeah, I might use it for something, but It's, yeah, I don't really use it.
But whenever we see that, then I think like for the new people like me, like can use it to identify new hold level and break levels, right?
Yeah, it certainly helps. Like it brings your attention to the chart. Like when was that? Midnight. Let's just take it away from there. Let's have a look. So that fired here. So distribution, accumulation, distribution. Yeah, so I guess if you paid attention to this, you'd be looking to short from that, which is kind of already in. Already in something. It's already in that. There's 3, 3. So there's something else already in there, but see what else it was. I suppose it is kind of helpful. Could just long that. Two towards that. Yeah. So you could short that into the hold, long the hold, back to the fib. Yeah. Maybe it's helpful.
Yeah. Certainly.
It gives you another long. So there's range. So the range is created, hold's already, or the test candle's already inside the hold. New candle opens on the other side, retests the range string and goes up. So that's a long. So yeah, that's. And that was a short. Wick's too long. Testing the whole candle. 2 candle range. I mean, scary short, price jumped up quite a bit before it tanked, but still it was a short. Yeah. That one hasn't had a retest yet. That's a pretty good sign that this is going to start to retrace for our range trend to the downside. Going to create So 3 hours and 30 minutes. Probably want to keep an eye on this. 3 hours and 30 minutes, it's going to create something in here possibly if this closes blue. And if it creates it with, no wick. Like if that was a close right now, then 2 candles later, you'd be looking for it to hit that. What can hold that up? Ooh, might get your 88. Yeah, range trends can be made even if the range trend is not broken by an engulfing candle. They just can't have another blue candle back inside a blue or a yellow within the yellow previously. So this down here can create a range trend. This can't, not anymore, because that's been inside that. Yeah, likewise on some lower time frame, that creates a range trend. As you can see, once it got up over top of it, it was able to use it as support, but it's losing that now. So that's going to be a different time frame. You really got to find the one that's got 2 candles between it. Oh boy. Okay, so say okay, bad example. Let's find one that's here. Yeah, okay, so this candle fans are going nuts on my computer too. Something's going to happen soon. This candle here wasn't engulfed. These yellows went up, came down. Okay. Nothing blue, right, in this. So you wouldn't take a direct fib trade off this candle because it wasn't a clean engulfment. But you also had this candle that went up, this came down, those went up. So there is a range in here that was broken out of from this and then re-entered, then broke up again. So that candle can create a range trend as long as you get more than 2 candles. So that there gives this the ability to create a range trend. This would be the candle that actually does it. That would be the trend, and you'd long that. And that's the long. So then you TP at the hold. So yeah, that's range trends are just different. They don't need engulfments. They just need a break out of a range. And it's not great. Like, you shouldn't probably trade them on single candles, but like this one here you could. Like, this is a really clear one because you've got the engulfed candle there. You've got this which doesn't revisit this, then the engulfment there again. So even though this is one candle and that's one candle, whatever those ranges were inside there, they got left behind by this secondary move up here. So that makes that a really obvious candidate to create a range trend. And even though you're only looking at it with one candle, that's it there. So it can also create a fib trade at the same time. So you could take the initial scalp into it, then run a trend on the close of the blue, because it was a close of the blue that touched and went inside the body of the blue. And then you could long that trend again, which was that long. Really lucky that that happened. So that candle broke it, but the retest of the range trend actually saved it. Created the next one.
And I said just to come back and retest it.
Yeah, they don't always do it straight away, but generally speaking, like I said, a range trend is a representation of the top or the bottom of a range. Unlike a normal trend, which you just keep arraying. I mean, eventually a normal trend would most likely become a range trend. Like that's a normal trend in that given moment. And the moment this candle here closes outside and away from that trend, it becomes that. And then this one closes outside, it becomes that, right? Where it gets really tricky is that you would never normally move this trend to there because there's no actual hard close under there. And that's the difference between a normal trend and a range trend, is that although you'd never array that down to here, this creates this. So there's your normal trend, and there's your range trend. And in this case, one never becomes the other, but sometimes they do. One does become the other. Wonder if that. So if you'd had a normal trend run off this candle to there, then this becomes the break, and then that becomes that. And that's not really a range trend, but it's still a normal trend.
But that was already hard closed, right?
Yeah. And then it lost it down here. Did lose it there.
That's a bit of worry.
Yeah, I mean that's a pretty crappy trend, really. The important one is that one and that one. Because if it regains that, it can just keep moving up, and if it loses that, it's going to dump down. Oosh. So then this candle was capable of creating a range trend. Broke to the upside, broke the ladder, down again, up again. First candle to re-enter it, that one. Got back up above there and kept going. So that one could create a 3-hour trend. Let's get that. And let's get that all the way back down there, but then that would already be below that. Good spot for a reversal.
So we don't have an interior trend there.
You definitely would have an interior trend here. Yeah, so that's where it's at. That's your triangle. So this trend here, which has been arrayed from, all the way back in the past from the daily, pretty much if that candle closes blue, as you see it there, then that trend, you could just forget about it and replace it with that. Because it'd be one and the same. Do range trends get more respected more than arrayed trend lines? Not respected differently, but they have a very different meaning. Because an arrayed trend line is just the price moving through the greater range, whereas a range trend is the very top and bottom of a range. Like if it breaks it, it's moving to where the next range is. So they have a more, I guess the easiest way to explain it is a range trend is a horizontal. It's just not flat, whereas a normal trend is just a diagonal. So, this this range trend here is the direct representation of this range. If everybody traded their chart patterns like their flags, if they actually used range trends to trade them, they'd probably be way better at getting wins. I think a lot of people use standard diagonals, which are just interior moments of the range more often than not. And then eventually they do become an exterior, like matters. That's an exterior moment. But that's not. That's definitely just an interior. Yeah, so if that creates a range trend there, if it breaks it, then really it can come back down to that 88 area. Because these are all just, these other trends are just interior array trends. So you probably get some kind of bounce off this, but not really. It's not really where it's going to target. It's going to target down here. Damn, my coffee's cold. Range trends, though, do get retested more often, which is why it's way safer to take them for trend breaks. Because what was the top of a range becomes the bottom after it's broken and vice versa. And so typically it will always be tested.
Thank you very much, Sim.
Until I get bored bored of it. I only do it when I am bored. There's no decent breaks today, but and I can't be bothered doing low time frame scalping anymore. Retrace. Plenty of things for it to break here, and then it can go down. See you. Yeah, I've been purposely just trying to limit myself to one sensible trade a day. But I am running out of movies to watch on Netflix and Disney and so I love Prime and all of the online piracy stations that are in languages I can't read. So yeah. Today's daily break is all we have. We've got nothing higher than that. We have no weeklies. We have no multi-days. There's not going to be any decent long move today, but it'll be a good day for a retracement to start because there's nothing to move it up. So we shall see. Or maybe it's just boring until tomorrow when we get our news. Which is today, technically, I guess. When is this? US unemployment claims, 12:30 p.m., 11.5 hours. Yeah. The real numbers will come out later. I don't think it's really going to matter what they do. Like, there's the one-day liquidity now is basically same up or down in 24 hours. So perfect setup for a Darth Maul candle. But yeah, 7 day, 30 days, still heavily to the downside. Don't know. Yeah, Darth Maul candle, double-ended lightsaber. So designed to wipe out everything in both directions. So it's basically just a institutional scalp. Liquidate everything below at a discount and go and sell it above. Or the other way around, like this from instant move from discount to premium on a short time frame. What does a Darth Maul candle look like? That's kind of one, but it's not on that time frame because it'd be a doji with a really long wick. Let's see. There. That's one. Okay. So typically you get them after periods of consolidation, sideways price action, uncertainty. People that like half the channel's going, it's going to go down, and the other half of the channel is saying it's going to go up. and then it just does both, that's a Darth Maul candle right there. Doji with a long wick, both directions. So it was the 5th of December 24. Let's see what we had on the 5th of December 24. It's unemployment claims. You would not believe that, would you? Just so you can see I'm not making this shit up. Hello, 5th of December 24. Yeah, good old buddy Gensler wanted to speak as well. Yeah, what are the odds? Yeah, the odds are pretty good. They tend to set up the liquidity by making everybody bored. When markets move slow, people take higher risk because they think they can have their stop losses tighter, and they try to make money with higher leverage because the markets are moving slow. And so everybody goes and puts their stop losses there. And no, most sensible people would be there and probably just get worked out, but a lot of other people would have gone there. Yeah. And this and unemployment claims, wick, gone. So that's we've got that same liquidity set up now, really, just we got the same news event in 11.5 hours. Funny. What were we watching? 4 hour. If they are going to Darth Maul the news, it would probably be worth them bringing it down just a little bit more first and just bring a few more shorts in. Because it's just the one day that's in balance. And so for Sol, that's sort of like 142 in one direction, 158 in the other direction. 158 is actually one of those key levels. This thing's, yeah, 158.6. Depends on the first day of the year. So the difference between the 7 day is the 7 day starts on the 1st of January, whereas the weekly is weekly. So if the 7 day happened to be a Thursday, then every 7 day thereafter would be a Thursday. Sorry, if the 1st of January was a Thursday, then that particular year, every single 7 day would be a Thursday. Whereas weekly is just always weekly. So multi-time frame candles, so multi-day candles reboot. So for example, here, if you look at that candle was Wednesday, the 1st of January, 2025, and it ran for 7 days until the 8th of January there. So that's this year. But you go back one before it, Monday the 30th of December 24. So that candle didn't run for 7 days. Like if you put this is the reset that happens every year with multi-days. Just chop some lines on those openings and drop down to your daily, and notice two of them are much closer together. So if you're running multi-day trend lines, you've got to be careful because there will be a candle which should be part of another candle, and the chart will show them as separate candles, and therefore the angle of your trend line will be wrong. That's because of that type of thing. So if you were to run something like this, it would be wrong because that candle shouldn't be there. So imagine now taking this candle and moving it that way. So to get rid of that one that isn't a real, let's just call it not a real candle, it's a Pinocchio candle. Let's just put that there. So that's our line. Take this trend and move it to there. Here's your rejection. That's how you deal with those little Pinocchio candles. That looks funny if we look at it on daily. Yeah. This looks like it starts nowhere, goes to nowhere. But the short works. I mean, it was kind of the top, wasn't it? Well, It's kind of the relevance of these timeframes you see up here. They can go for, well, not necessarily 3D, but daily and down, week and weekly can pretty much just go forever. So they're the easiest ones to chart on. And you can pretty much chart on any number, but like if you pick a number, I don't know, it's a non-divisible 200 minutes. So if you go with something like this, what you've got to do is find the start and end of a day. And pretty much only this candle forward, and you've got to exclude that one. So it's this candle to this candle. So you can chart on a 200-minute chart if you wanted to, but it'd only be literally those candles there that are relevant. So you've got that engulfment there, and could have taken that long. And it came down here, hit that, pop back up. But that's not a 200-minute candle, and that isn't either. That's a much cleaner range trade on 288-minute, which doesn't suffer from incorrect size candles, etc., etc. So up, range, up, hold inside, yellow inside hold, reject off the trend, down, hold level. Lower time frame, play, does, new trend. After close. What were we aiming for on that? Oh, 1.1. I wonder what that is waiting for. Good night. See if we can find something. So I've got cheeky orders set up on things like this, because that would be a really good target for some kind of wick, especially because of that. So break trend, that can't break that trend. But the next candle could, and if it can stay above it for the next 22 and a bit hours, then the horizontal support is there. It's already broken. Who stops it? Go through all these. So we have 1 day, 2 day, 3 day, 6 day, 19 day, 38 day, 57 day. Can't really do too much with this because it's too big and it spans too many years. And it's a multi-day, so that candle there is a bunch of bullshit. That one. Look at this. So when you look through all these different time frames, you sort of start to notice confluence in levels. Like you'll just see how many times this 188, 189, 187, like it just continuously appears across all these different time frames. So you don't have to be a rocket scientist to know that that's going to mean something. You're going to hit it, and it's going to do something. I think I have a 2v2 version. There you go. Play with that one. I haven't really bothered to finish it off too much. I don't know if the lines are accurate or whether the plot shapes are accurate, but the alerts are probably accurate. There you go. You can perfect it and then share it with everybody. Okay. It does take the fun out of looking for them. Also means your phone wakes you up all the time. Yeah, I'm a pretty big believer you should probably understand how these things work rather than just have some script that tells you. But what we got going on here? And 68. Backside of that range. Broken by that candle. Not retested. $196. $175, $168, $196, $189. Lots of numbers around there. $169, $185, $176. I can't remember what 147.4 was from a few days ago. Weekly. Some target. That. Yeah. It's got 3 days to get back underneath it. Ooh, Hong Kong Open. Dumpy or pumpy? You reckon? If I was a nasty market maker, I think I'd spend the next 10, 11 hours being dumpy. To get a few more shorts in the game. That is exactly what they live for, but it's not just you. Yeah, they don't discriminate. Money is money. Whoever it belongs to, they simply want it to be theirs.
might be bored enough to scalp that.
What do you reckon? Too greedy? That price right there basically would wipe out every single long that's been placed in the last 24 hours. Liquidate all of them. I think it ranges down to about 143, 142.5, 143, 143.5, $277 million worth.
There are a lot of shorts in 130s, right? Sorry,
Sorry?
a lot of longs. There are a lot of longs in 130 as well, like huge liquidity.
Yeah. I'm just thinking more along the lines of where will they go if they just want to do a fast wipeout of everything on the news event. I mean, if we looked at 7-day liquidity, the question is why would they not go to 130? If you look at 30-day liquidity, the question becomes why would they not go to 120? I think the answer basically is that it's a possible target, but it requires the announcement of COVID 2.0 or Russia paints the word tariff on nuclear missiles and sends them to the US. You know, it needs something like that. Like if they're just suddenly going to go all the way down in a straight line to 120. It's pretty, it'd just be absolutely normal price behavior to be stuck under a 4-hour range trend like it is now. If it loses, if it gets one more, doesn't really even have a decent support that's lower time frame in there. It's pretty normal for it to come down to here, to try and find a means of getting through here if it doesn't create something else in the meantime or have something bigger. That's a lot of confluence too.
you know, range breaks typically, they reject. So if you've broken this range and you haven't come back down to test it yet, gone through this, haven't come down to retest it yet, still got 3 days to go, 4 days nearly. Broke out of this range, haven't come down to retest it yet. So price being lazy, some kind of dip, is that 143.240? Let's have a look inside that 4-hour candle. We get down to 15-minute, right? So let's go 15-minute. Lower. Nope. Look at that. 3 to 159. Can't really see why it would go any lower. No. Like, that should be a stepping stone for it. It may go lower after bouncing off that, but there's nothing really. Like, it would be completely inorganic for it to simply go straight through there and do that. Like, that would be weird. Probably come down into here, bounce back up, reject off something else, maybe go down then and go further to one of those deeper points and liquidate some more people, but it's Yeah, it doesn't. There's a good example, and that's a very basic example. Now it's going to go into it, bounce, then go through it, find some other reason. That's retesting of the broken range there, but not before it bounced off that. So in, TP, down to something in here. Nice, just snuck under that line in the next 14 minutes and then open the next candle. That'd be a pretty good sign of intent. tools are on Dirk's desk. Big range trend. Gonna keep bouncing off it, aren't you? I'm officially really bored. Anyone got anything?